When someone says that Monday price action is not good for trading, I laugh at them. The reason is Monday is actually too easy to trade. As I'm the wizard of this market, I'm gonna explain this beautiful price action. So, welcome folks to another episode of T2 SMC Trader. Make sure that you have given me the thumbs up and you have subscribed to my channel if you are new. Over here, this is the Monday price action and I'm gonna explain the PM session only. Around the AM session when market was going higher, you remember that I told I'm gonna get the sell setup only. So I'm not interested to participate in that buy run. What is the reason? Because of this range. So from low to high from from Friday high and Friday low. I would love to see that market will stay inside this range. In my morning session, I told that I would love to see price will close around this area, just around this area. Okay, when market was over there, I told that market I would love to see that market is going to close around that area. At the same time, I told that when market is falling, you are good to go for sell. When market, how far you can look for the sell until the high of this new week opening gap. If market come around that area and then start to go higher, you will look for buy again because this is the best opportunity to take buy. You will look for sell again if and only if this new week opening gap is gonna broke from 15-minute chart. If market can break this new week opening gap, yeah, I will start to look for sell again. Until then, whenever market will go little higher, I'll look for sell until this new week opening gap high. Okay, and when market will come again to the new week opening gap high and then it will start to go higher, I'll start to look for buy. This is the simple way to trade Monday. Over here, I would love to consider or draw your attention to this 8:30 opening. Okay, so this is my important level, this 8:30 opening. If you don't want to mark that 8:30 open, no worries. Here, this is the order block from 15-minute chart. So I am not gonna frame my trade from a random level. I have some level which is from 15-minute chart. So this 15-minute bearish order block is of absolutely a perfect level for me to frame a sell setup. Now I'm going to 1 minute chart because all of my setup is actually from 1 minute chart. If you are with me in my Twitter, you have seen that I have taken this sell until this high and it reached until this constant crossment. I'm not interested to explain that sell because there is much more beautiful setup which is really so beautiful, so beautiful. Okay, so for explaining this one, I'm gonna use this both chart so that you can understand that what is happening around that area in 1 minute chart. So this is the area where here, this is the area. Okay. So market fall until this constant crossment from 50-minute chart. How does it look like when this candle closed? I mean, how did it close? It has been reacting from this constant crossment from the new week opening gap. Then market, if you look from your 1 minute chart, or what do you see? You have seen that market has taken this relatively equal lows. It has taken that sell side liquidity around that area inside the PM session. Okay, and this all the silver bullet. Then market went higher. How dramatically market went higher? Now, can I look for buy over there? Absolutely, you can look buy from here, but you have to understand that your buy setup should create. That means your entry should be above the new week opening gap high. You can't push your button when market is below this new week opening gap high. So you can see this was the run which has shifted the market. Where is your market structure shift? This swing high, when it has been shifted around that area, you got your market structure shift. Now you can ask, brother, after making this swing high, market has made another swing high and swing low. Now, sorry, try to understand this part. When market has made this swing high, then market went low higher one more time, but then it fall. Why it has fallen? Because to take this sell side liquidity, this relatively equal lows, when it has taken this sell side liquidity, how beautifully it went higher. Did it left any sell side liquidity relatively equal lows around that area? Can you see it? No, I can't see it. So I can see that after taking this liquidity, market spent little time over there around the constant crossment of new week opening gap, then the very nice displacement. When I got this displacement, that was my market structure shift. So around this area, this is the anti-parabolic gap, that is the, I mean, breakaway gap. Now you can say, brother, here is another fair value gap over there, which why it's not the breakaway gap. It's not the breakaway gap. The reason is it's too small comparing with these two setup, and I would love to push my button when market is above this new week opening gap high. Okay, so even if market would love to go a little lower, it can tap to this new week opening gap high. It should not break this new week opening gap high. If it break that new week opening gap high, my buy setup is not valid anymore. That's why I'm gonna use these two parallel gap instead of this parallel gap. Either way, it's a very small. I mean, if you just adjust your chart, like it's not something like obvious. So this is the obvious parallel gap. At the same time, if you look over here, it was also inside the PM session. Okay, so you can say brother, when market has taken this sell side liquidity, this is the same logic from 15-minute chart. It was rejecting from this consonant crossment. Then that was a very nice displacement. What a nice displacement. Now, why you are not going to take the buy from there? Because there was no market structure shift. Look, this swing high is not valid for shifting market structure. There is no swing high which is valid for shifting market structure. Here you have this swing high which is valid for shifting market structure. Now, maybe you are not willing to mark this swing high because it's not looks like a swing high to you. No problem. Mark this swing high as your market structure shift. This one. Is that valid? Go and watch my market structure shift video. You will understand how beautiful that swing high is valid for shifting market structure. After, so this is why you are not going to push your button over there. Market went lower, make relatively equal lows, little consolidation, take all the liquidity, gave you the market structure shift, anti-favorable gap, tap your to the anti-favorable gap where you are going to take the entry. You are going to take your entry when market is going to tap with this anti-parallel gap. Where should be your stop loss? Just above, I mean just below the breakaway gap. This is your breakaway gap. Now, where is you are going to target? Because from 15-minute chart you don't have any kind of liquidity from 15-minute chart, okay, and from 1-minute chart also you don't have any liquidity. First, if you understand why you are looking for buy, you are looking for buy because market is not willing to break this new day opening, sorry, new week opening gap. So it has been rejecting from this new week opening gap. That's why you are going to catch some move. To that specific move, you can look for this last parabolic gap from 1-minute chart. As you don't have the liquidity around that area, so you can target this 1 week last parabolic gap over there. This is your setup, and you can see that market perfectly reached until that 1 week last parabolic gap. Did I teach you this 1 week last parabolic gap? Obviously I did it. That was your first setup, first entry around the PM session. Now what happened next? Then market fall again, came very near to this new week opening gap, didn't tap to this high. Instead of tapping to that high, market keep going higher, keep going higher. Where did it reach? Remember this line? That is my 15-minute order block. So from 15-minute chart, look at this. This is your 15-minute order block. At the same time, this is that, actually this is that 1 week last parabolic gap over there. What is that? Fake breakout. A perfect fake breakout. Just market went one more time, then it is rejecting from the consonant crossment. At the same time, that was your order block from 15-minute chart. So you are not going to frame your setup from lower time frame. You are actually framing your setup from your higher time frame. Now the question is, why I'm going to look for sell? Why I should not look for keep looking for buy? Now here is the part from Monday price action. Monday price action, it went higher. So when it went higher, it has already done its higher job. It doesn't need to go back again to the high. Instead of that, it should look for Friday low. It should go very near the Friday low. That's why you can frame any kind of sell setup from that area. You should not look for buy. Whenever it will come very near to your new week opening gap. Every single week you will get your new week opening gap. Every single week in Monday you will get your new week opening gap. Okay, so don't get panic because of this new week opening gap. Every single week you are going to get this. So whenever it will come to this new week opening gap, you will start to look for buy. When it will go little, you will get some distance from this new week opening gap. Then market has already traded higher. It has done the higher job. Everything has done over there. You will start to look for sell again because you should believe that market is coming for the sell side liquidity. Now here, another thing I would love to show you over there. Look at these lows, these two lows. What is that? Relatively equal lows. What is that relatively equal lows? With a shallow run, that is your obvious liquidity. So market has first made that obvious liquidity, then it went higher. When it has traded some kind of obvious level, what should be your next target, where market is reaching for? This is that sell side liquidity where market is actually reaching for. That is why I told that I'm so confident that I would love to see that market is going to complete its run around this area, because after taking this sell side liquidity, it will be done its job over there because of this sell side liquidity. And you can see that sell side liquidity has taken over there. How beautifully it has taken over there. Okay, so let me mark this shallow run, shallow low. That is the low of that shallow run. Look over here. Did market take that liquidity? Absolutely, it has taken this liquidity. Now come back again over there. When market it has traded that area, what else do you see? The last parallel gap, 1 minute order block, a perfect 1 minute order block. Mark it on your chart, please. Mark that. You don't need that on. You have this 50-minute order block over there. Market was little overzealous to trade until that order block. That's why it went little higher. Then market fall. Where is your first market structure shift? Let me show you. Here, this is your market structure shift, right? So you are going to mark this low. When it has shifted, this is a parallel gap. You are going to take your sell. Now tell me, is this swing low valid for shifting market structure? Go and rewatch. Rewatch the video I have made for shifting market structure, and then tell me, is that your market structure shift or not? I'm over sure that you will tell, no brother, it wasn't the market structure shift, because it is not, it didn't meet the requirement over there, which should be valid for shifting market structure. Is that your, did you get your market structure shift over here? No, you didn't get your market structure shift over here. So you are not going to frame your trade from that parallel gap, though it is reacting from this parallel gap. Also this small order block from there, this is also your new order block. First this one has traded that order block, this trade, I mean this candles has traded that order block. I'm not interested to explain the order block over there. Instead of that, I would love to show you the perfect setup from the 22 IT model. Okay, so when this thing happened around that area, that wasn't your market structure shift. Your market structure shift was over there. So this swing low, when it has been shifted over there by that specific candle, you got your market structure shift. Now this swing low is valid for shifting market structure. Let me check. Actually, I'm not sure. Maybe it's valid, maybe it's not valid. Now you will tell me, is that valid for shifting market structure or not? This swing low. Okay, either way, it's your job. Then when you got this market structure shift, where is your parallel gap? There is your parallel gap over there. This is your parallel gap, but brother, it didn't trade that parallel gap. This parallel gap didn't trade by that candle. I can see it perfectly. But over here, my question is, are you going to wait for that thing is gonna trade that parallel gap perfectly? Isn't it this setup inside another setup? Remember in my Twitter video, I didn't wait to tap to this parallel gap. Just go to my Twitter and watch my entry video over there. I just pushed my button when market was very near to that parallel gap. The reason is this setup was inside that setup. Now this whole setup is inside this setup. There is the setup. This is inside that setup. I'm not interested to see that, to wait to see that market has traded that parallel gap. No, I'm not gonna do that. Instead of that, when the parallel gap is confirmed over there, I'll try to take close approximately entry. So that should be my entry point, wherever I will be able to take. And where is going to be my target, I mean stop loss? Am I going to put my stop loss above this parallel gap? No, I'm not gonna do that. Instead of that, I would love to cover this high, that high. Why I'm gonna do that? Because here I have the breaker block. Okay, so I mean sorry, high, low, higher, high. This is my breaker block. It can be the consecutive or breaker block, or this can be the lowest down close body close candle, which is gonna be your breaker block over there. Okay, so this is my breaker block. You can see that market has perfectly tapped to this breaker block over there. It tapped to this breaker block. After tapping the breaker block, market fall. Now why I'm gonna put my stop loss over there? Because I'm gonna cover the mohawk. The mohawk cover, I'm gonna cover this propulsion block around that area. It is something else. It's up to you where you should put your stop loss, because if I put my stop loss over there, my target is gonna be this new week opening gap high. It's for sure. Okay, I'm not gonna target this sell side liquidity. I'm not gonna do that. I'm gonna target over here this new week opening gap, and in this type of situation you will see the risk to reward ratio is 1:1.44. I could simply say that I'm gonna cover this breaker block, and my risk to reward ratio is going to be uh, 1:2.16. But I'm not gonna teach you something wrong, because over there that stop loss over there, it's absolutely wrong. You have to cover the mohawk. So in this type of situation, it's not a good thing. But if you are oversure that market is going for some specific level, I believe that it's perfect. What else can you do over here? After taking the partial, you can hold your trade until this constant encroachment. You can do that. There is nothing wrong, but you have to make sure that you have taken the partial over there, and then your stop loss is to the break even. Then you can hold it until that area. Never ever hold your trade until the extreme liquidity. So that was the second setup around the PM session, in my opinion. So these two setup was the perfect setup by this PM session. Here that was a sell setup as well. I showed you in live how beautiful that sell setup was. Okay, then this buy setup, and then again this sell setup. Why you are looking for buy and sell around that area? Because it is possible to do that in Monday. In Monday you can look for buy and sell, buy and sell. You can do that because this is the accumulation day. You know market is coming lower, it is going higher, coming lower, going higher, coming lower, going higher. So this is the reason you are able to look for buy and sell setup. Then why in the morning session you are not able to do that? I told you that I was able to do that. I could take that buy, but the only thing was missing, market didn't tap to this new week opening gap high. As it didn't tap over there, I was unable to take that buy. This is my intention, okay? But I was looking for the perfection. I didn't get the perfection. I didn't take that buy. If I could take that buy, then I framed the sell setup. So in the morning session also, I took buy and sell. In PM session, I'm just showing you the same thing, buy and sell. Okay, so that was the Monday session, and some of I heard that someone just tweeted it was sick and destroy mode. Ah man, I was just laughing to his comment because I proved that whatever I told, it reacted like the same way. Okay, I was just confused from where it is going to reverse. So that was my last line, and I told that if it can reverse from the constant encroachment, I'm gonna frame the sell setup, and until this new week opening gap high, I'm gonna take sell. So that was all about this video, guys. If you think that this Monday session got little clear to you by watching this video, and keep watching the video I'm uploading, don't forget to write down boom on the comment box. And until the next video, cheers.